Hello everybody, February 20th, 2023. Let's take a look at what Bitcoin did over the weekend and the trading holiday today, or market holiday today, which honestly has not been too much. Obviously we saw some chop over the weekend with fake breakouts, fake dumps, but what I said on Friday is that as long as Bitcoin remains above 23.3, I am looking for a final move up to about 26.2 to 26.8, and that should finish off this move. I do still plan on taking all my profits at that point and raising cash because we should see then a larger pullback into the low 20s and possible sub 20K. If we don't hit that 26K region before we break 23.3, then we've got a bunch of different scenarios we need to deal with. And I'll do a quick rundown of those. All right, so first, just the larger picture. I'm operating right now under the assumption that we are in this orange scenario where that was our first wave. Here's wave 2. This is 3, 4, and we're working on 5 right now. I've been using that as my primary scenario since we did a 3-wave move down into this orange box. And I did pick up longs in that orange box, all of which have stops now in profit on them, which is fantastic. So risk-free positions on Bitcoin and many alts from that long area. And then if we zoom in here, it looks like we should be going into the final move here for this wave 5. It did not really start off traditionally. This is, not an impulsive move here, but we can still use kind of the impulsive targets to guide us. We need to stay above 23.3. That's the low we struck there. Below that, and the probability raises that we are in fact going to go back down to some level. I'll go over that, like I said, in a second. But for now, I'm assuming 4 probably ended here. It's possible, I was looking at this over the weekend, that we might see an A, B, C expanded flat and kind of reset 4 over here. I don't know if that's realistically the primary at this point because that was a little high. So for now, I'm going to put this back here and say that's 4. And then potentially this is 1 and 2 of that 5, meaning we still have a 3, 4, 5 to go. But that is a little bit unclear at the moment. It is certainly possible that we're still within this correction. This can very, very well do that. I mean, we can absolutely see it come back down to that 23 area. But as long as we are above that 23.3 level, we don't have a sustained break below it, then it's hopefully just a reset of this 4 before we then press higher for 5. But obviously, ideally, we would like to see this just continue upwards sooner rather than later, just to get this move finally finished off. So target for this move is the red box right here. That is the target based on this being 3 and this being 2. So you can see it kind of is just the lower end of that box. The main box is up here. So it's possible we see extension up to even 28. The higher up we go, the more, the more I'm going to be selling basically. I plan to sell most of it in this box just to be on the safe side. Because once we get up here, we are in very real danger of seeing a pretty significant pullback from that point that will finish off a 5-wave move, which is fantastic, potentially in the longer run, because we should then see a pullback that is a great buying opportunity. But that pullback is likely to come back down to the low 20s, or potentially even sub 20. I mean, it can certainly come back down to like 19K or so if it really wants to. So that's my warning there. As we get up into this box, we are likely going to see a pullback quite soon after that. And so let's discuss now, what if that doesn't happen, right, in multiple ways. So what if it comes back down and breaks below 23.3? Does a sustained break below that? Well, in that case, we have I think probably the most likely scenario that we're actually still in this larger orange form, meaning this is A, that's B, we're going to get a C down, kind of revisit this low 20 area before finally doing that 5 up. That is a possibility. It's also possible that that blue scenario is still correct, which is why it's still on here, where we actually finished wave 5 there, and then this would be A, B, and C. In the blue scenario, that becomes primary below 19.8 if we don't hit this first. If we go down first before hitting that area and we go below 19.8, then I move into saying the blue scenario is correct, which would just mean that instead of this being a fourth wave, this is actually a second wave, and then the next move up should be pretty significant. So either way, I am probably looking upwards from here, as long as the move down looks corrective. All right, let's see what else we need to talk about here. Just a quick note for everybody. I am providing public Bitcoin analysis on Mondays and Fridays. That does not mean I'm not analyzing the markets in the middle of the week. I am. I've sent plenty of notices out to members saying I'm, longing this area, here's my stop, whatever, for them to use, and not just on Bitcoin, but on plenty of the alts as well. This analysis that I do publicly is really just to kind of give you a taste of what my analysis methodology can do, and it is, it gives you things like if we go below 23.3, we should potentially be looking for lower down. It's kind of like if this, then that. And it just gives me a really good way to manage risk in the market. I was buying here, right? I was buying there. I had stop out points that I felt comfortable with. I would have bought lower down if I needed to as well. And as we proceeded upwards, I moved my stops up based on that. And the same thing is happening now. And as we get up here, I'm going to be selling, and I'm going to be waiting for a pullback. It's giving me information that says if we get here, then I sell, right? If we went here, then I buy. And that's why this is useful. And yeah, okay, my primary scenario back here was incorrect. That looked like it should have continued downwards from there. But I said if we get above, I think it was 18.1 or 18.2, if we get above whatever that level was that I set, then we're likely going higher. And so at that point, I stopped out of shorts and I began looking for longs instead. So it's not about being right 100% of the time. It's about being right with your trades more often than not. And just because I'm analyzing something doesn't necessarily mean that I'm taking a trade on it. I don't think that I shorted this area, even though I thought that was going to be the top, because it seemed a little risky. I probably won't short that area, even though it seems like it's going to be a top, because it's going to be a little risky, right? Because we could blow past it. So anyway, it's deciding what trades you're going to take, and using information from this analysis to decide if this, then that, and manage your risk in that way. I can't tell you what my primary scenario strike rate is. Like, for a while there, I thought blue was the primary scenario, and then as we did this, I went, you know what, it looks more like orange. So no, I'm not always right about the primary. This, again, I was wrong down here. But it doesn't mean I'm not making money along the way. I stop out when I need to, and I shift bias as needed. So again, more importantly, it's when you take your trades, this was a great area to trade, and when you take your profits, and when you stop out. And as far as trades go, I have an 84%, I think it was 84% last year. 84% of the trades that I took were winners, which is just a ridiculous number. So anyway, all of that to say, just because I have been wrong in the past does not mean that the information is not useful. But if you don't find it useful, that's fine too. Find a methodology that works for you. You know, this works for me, and I'm just trying to kind of use it as an educational tool, and this is what I see in the markets, and if that's helpful for people, then that's fantastic. If not, that's fine too. All right, anyway, all of that talking to say, we are still likely going up 26 as long as we're above 23.3. Below 23.3, my bias changes. That's how it works. All right. Anything else? Let's talk briefly about what happens if it just blows through here. And to be perfectly honest, what happens if it blows through there is nothing great. Honestly, I would probably view this whole thing as an A wave, this is a B wave, and if we blow through, we're probably just going to make a C wave up, which would look like this, just to show you. Anywhere between 28 and 37K, if this blows through here and we just continue upwards, anywhere in this region is ripe for rejection, and in rejection in this case, we're not looking to buy the pullback because this would actually send it down. So one of those, again, scenarios where just going up is not necessarily a good thing. If you're not building the correct structure, it's not a good thing. And this, if it does project upwards, you know, the 1.0 extension is typically the target that it makes. But honestly, anywhere in that red box could then signal that we're dealing with a larger corrective pattern and we should prepare for the worst. So yeah, I'm going to be selling in this area, and okay, if it goes up, boo-hoo, I miss out on some of those gains, but it's very likely that I will be glad to be in cash after that because we will most likely see a big crash from there. So anyway, again, it depends on how it all forms and what it's looking like and all of that, but the structure would not look clearly bullish if it did that. So ideally, we get here, we do a 3-wave pullback, we buy that, and then we go to the moon. That's the ideal situation. So we'll see if that plays out. All right, I think that's all I have to say. So I will talk to you all again on Friday. We will see where we are at that point. Hopefully Bitcoin is broken out of this 25K ceiling and hit 26K for us so that we can then deal with the next move. All right, guys, have a safe week, and I'll talk to you Friday.